I want to jump in and ask about, Sam's question was really good around like what we do at the end of a 7-year term in terms of like strata titling or vacancy. But I have heard it being talked about where people will buy commercial property knowing that the tenant is going to finish up soon, and then you'll do market analysis based on what rate you could get, and it could be a superior rate. So is that why you see there's pros to buying without tenants or a tenant nearly leaving or finishing their lease? Like, should we go to the pros and cons of no tenants, or is there more to talk about with tenants?
Yeah, so when there is a tenant, whether they say you got one and they're going to leave anyway, even if they were on options, so say they're on like 3 by 3 by 3, you still do a market analysis on rent at every option. So if the rent's gone up by 30%, you push it up 30%. So it's not really the value there. The main value is if you think you're getting a better buy because they are going to leave, and that puts off investors because it wipes out all the lease stock people. And some people just have a fear. They're just like, I don't want to buy a property that's going to be vacant in 8 months, for instance. Banks as well typically won't look at the rent if it's less than 18 months as well. So you want 18 months left on the lease for the banks to look highly upon it. So finance is actually going to be a bit harder if it's a shorter one. Where it's probably critical, like besides the buying well, because you might get it 5 or 10% below market value because there's less buys in it, is if you see value add opportunity. So like the example I used before of, okay, they're going to move out, I can put a mezzanine area in or subdivide the tenancies, then you're doing a value add strategy where that means you get shorter uplift, which means you can progress your portfolio quicker. Because if they were there for 5 years, you could do nothing. Whereas if I can fabricate 20, 30% extra capital growth out of it, cool, I get to go buy another one within a couple of years.
You just need the cash to do it, to do the building, right?
Yeah, but again, it just depends what you want. Like a mezzanine you can build for around $80,000. So, and you'll generally get probably a 20% uplift depending on the portion size. And everyone would just say, why doesn't everyone do that? It's hard to get the right price and buy it well and time the tenants right and do all that type of stuff. But it's the same thing as you can buy and, I don't know, renovate a residential property or put a granny flat on and get some kind of equity that way.
What would be I know it's going to be a suck it, like it depends answer, but the council approvals for these mezzanines, or say if you go in strata title, like is that $80,000 that you mentioned? Is that inclusive of getting that council approval for that mezzanine?
So council, again, this is just for ballpark numbers where most investors lie. So sub $3 million, depends on the size, obviously. It's about 10 to 12 grand for the approval. So by the time you get all the engineering stuff, then the fabrication is anywhere kind of 60, 70 grand-ish, because it's just some beams effectively and the floor. Offices, if you're building an office space, that's a bit more expensive because you've got a bit more fit out and air conditioning and stuff like that. So it does depend, but it's case by case. You just assess it on its own merits and kind of go from there. It's always a nice to have. Like if you know there's an option there, I can put a mezzanine area. The big one, here's a little trick for people, is the big one that stops most people is they buy it thinking they're going to be okay. It's car parks that actually council push back on. So if you build too much area and you don't have the extra car spots, they'll actually say no. And again, as you mentioned on previous ones, talk to town planners because they're going to do some checks for you.